cestě ke splnění vašich plánů může být i ten nejmenší krok ten nejtěžší. Otevřete si účet u Komerční banky a my vám pomůžeme. Ať jsou vaše plány malé nebo velké, s námi je dokážete naplnit. Vyzkoušejte si i vy můj účet Plus. Právě teď pro nové klienty na celý rok zdarma. Komerční banka. Budoucnost jste vy.
Good morning, good afternoon, ladies and gentlemen. Let me welcome you at the presentation of results of Komerční banka for 9 months and third quarter of 2020. On this occasion, we would like to share with you also the details of the strategy of Komerční banka for the time horizon of 2025. I'm here in the studio with Jan Juchelka, Chairman of the Board and Chief Executive Officer of Komerční banka, and also with Jiří Šperl, Chief Financial Officer of Komerční banka.
Good afternoon.
And we will be joined also by other members of Management Board of KB, namely Didier Colin, Chief Risk Officer, Jitka Haubová, Chief Operating Officer.
Good afternoon.
Miroslav Hirschl, Head of Retail Banking.
Hello.
David Formánek, Head of Corporate and Investment Banking.
Good afternoon.
And Margus Simpson, Chief Digitalization Officer.
Good afternoon.
Throughout the presentation, we will be referring to the slides that will be, of course, shown on the screen, but you can also download it from kb.cz/investors. And let me point out one more thing. You can see we are not wearing face masks at this occasion, but this is because we have been tested recently yesterday for COVID, apparently with a negative result. So we are, of course, in full compliance with all applicable regulations. So I would like now to ask Jan to start with presentation of the review of the results.
Thank you very much, Jakub. Good morning and good afternoon, ladies and gentlemen, and thank you for sharing with us your time. We appreciate very much that we can bring you to the presentation of Q3 results of Komerční banka and provide you with our view on strategic outlook until 2025. Let me start traditionally with the macroeconomic situation of Czech Republic. The third quarter was very strong in Czech economy, and KB performance delivered very solid outcome of that particular quarter. Obviously, we are in very particular year. We are finding ourselves in situations which are new and are affecting our day-to-day routines and operations. Nonetheless, coping with them is part of our jobs, and I need to say I am very thankful to all management team of Komerční banka and the employees of Komerční banka who are able to provide the highly professional service also during this very particular period of time. GDP in third quarter in Czech Republic was up by 6.2% compared to the previous quarter, which was a stronger rebound of the performance than our macroeconomists expected. Nonetheless, still 5.8% lower on year-over-year comparison. As a result of that, our macroeco research expects 2020 GDP compression on minus 7.6% and increase of GDP for next year by 3% after a recent revision presented approximately a week ago. One of the indicators which we take as an example, as a benchmark of the performance of Czech economy is the car production. Here we see that for the first 9 months there was a 25% drop of production, mainly coming from summer and early autumn strong orders from Europe. Unemployment in Czech Republic was always, or for a long time, not always, but for a long time, a very particular discipline, which is still keeping very low levels at 2.8%, knowing that we are somehow under the impact of measures adopted by Czech government in favor of employees, in favor of keeping certain level of employment in place. We see inflation above the toleration band of Czech National Bank, so still slightly above 3% in September. Nonetheless, based on the outlook of our macroeconomists, it should be slowly but steadily floating down below 3%, closer to the targeted levels by CNB. Speaking about Czech koruna, there is a lot of volatility in it. There was a weakening trend on around the levels of 27 Czech korunas per euro, which is let's say showing the immediate, I would say, reaction of the local currency on the global crisis. As far as market rates are concerned, the 3M PRIBOR ended at 0.34%, whereas the 10 years interest rate swap at 0.8%, which is minus 92 bips compared to on year-to-date comparison. As I have already mentioned, Czech government has adopted a not so short list of supporting measure for employees, for employers, i.e., businesses and companies, and also for public sector. Let me say, all these programs are in accordance with, let's say, the European standards. There is special support for people taking care of their child at home, special support under the name of antivirus program managed by Ministry of Social Affairs for people not able to work upon the decision of the government of closing certain businesses, and on the side of companies and entrepreneurs, there are various programs supporting them either through cancellation of down payments of taxes, or prolongation of certain obligations, or prolongation the effective date of certain obligations in the fiscal side, and beside others, which is part of our job, also a state guaranteed loans program known here in Czech Republic under the name of COVID, COVID-1, COVID-2, COVID-3, COVID Plus, COVID Hotel, and others, which are in fact based on partially or fully guaranteed loans provided to small and medium-sized companies. Speaking about help of in the broader context, Czech Republic obviously is part of the discussion with the European Commission about creating the EU recovery plan, where you may have noticed there is like 750 billion euro ready to be activated in favor of supporting European countries. Czech Republic has put together a so-called national recovery plan, which is mainly targeting investments into infrastructure, digital solutions, support of education, support of labor market, research and development, and others. The final version and the final form and content of this paper will be known after it is agreed locally at the level of the government and confirmed by the European Commission upon the in accordance with the time schedule given by EU. You may remember we have put together with 3 other large banks in Czech Republic so-called National Development Fund. This vehicle is supposed to support infrastructure investments in Czech Republic, mainly in the field of transport, in the field of digitization, and in the field of education and healthcare. Let me say that we expect the licensing process to come to its end by Czech National Bank in the horizon of weeks. So one could expect first investments of that kind to be activated at the end or at the beginning of next year, end of this year or beginning of next year. The budget deficit of Czech Republic was approved by the parliament at the level of 500 billion Czech koruna. The additional support of Czech government in the context of the second wave of COVID-19 pandemic situation is mainly based on prolongation of the existing products. Let me jump on the business performance and main highlights of Komerční banka for the third quarter. On the left-hand side of the slide, you see recent strategic partnerships concluded between KB and external parties, either in the form of signing a strategic cooperation agreement or by equity investments of rather lower scale, but still for us important into various fintech companies. Let me say Roger and Lemonero, both being built as platforms for distributing working capital facilities, either for small and medium-sized companies or for e-shops of middle size. Here, with both, we want to improve and increase the speed and quality of the client's proposition for companies mainly from the field of small and medium-sized companies. Our clients love digital solutions. We know it. We are constantly working on improving our internet banking and mobile banking. You can see in the middle of the slide that on year-over-year comparison there is 160,000 new users of KB mobile banking. The overall penetration is exceeding 1/2 of our total retail clientele. Obviously, accordingly to the existing sanitary situation, people like to pay without any contact. So all the solutions of digital wallets are, let's say, increasing their importance and are increasingly popular amongst Czech citizens and KB clients. Let me say that hand in hand with downloading and activating mobile banking solution, people are also used to use so-called KB key, which is our authentication tool, helping them to open internet banking or mobile banking in very secured way. KB key being also reused as a so-called KB signature or digital signature on contracts and other documents between KB and the respective client. Let me say that we are traditionally showing you also the main dashboard. On this dashboard also the picture of digital sales, where without any large surprise the consumer loans are leading the pack in that particular field. Speaking about and still keeping an eye on the digital solutions and digital assets creation, let me say that we have finally concluded, after the blessing of European Commission and the anti-monopoly authorities, a foundation of a company named Bank Identity, which is for us and for the entire country, especially for the banking sector, a breakthrough to using the identification created with a bank as identity in front of public or private service. Here we are working with all other banks, inviting all other banks to come up with their solutions to plug in to Bank Identity, which is a special vehicle company created by, for the time being, by the 3 largest banks here. And we have a unique opportunity to create the widest possible business coalition also outside or beyond the banking sector with companies who might be providing service through this platform. I have already mentioned the KB key used as a signature. Let me say also that our subsidiary SOX have concluded few very sympathetic innovations, amongst other also the voice assistant named Emma. SOX is a company dedicated to consumer lending, as you perfectly know. KB was awarded as the safest bank in Central Eastern Europe. For us, it's a huge honor, being the safest banks recognized by Global Finance magazine in Central Eastern Europe, by definition also in Czech Republic, makes us and our responsibility towards the society and our clients even stronger. Our private bankers have achieved recognition as the best private bank for digital customer in Central Eastern Europe by Professional Wealth Management magazine. Let me say one additional word about our exposure towards Czech society. We were asked and we were actively proposing to Czech government part of our capacity of our contact center. What does it mean? Part of our contact center, specifically 50 colleagues, are dedicated to help the health ministry with tracing the contacts with positively tested people, positively tested on COVID-19 obviously, and helping the entire country to get out a bit faster from the current sanitary and healthcare problems. Let's move to numbers. As I have already mentioned, third quarter of 2020 was very strong on both sides of the balance sheet. Speaking about lending, third quarter was stronger than second quarter. Not a big surprise, right? Nonetheless, it was by 6% stronger than the third quarter of 2019, i.e. our front officers were able to sell proactively and provide Czech economy with new financing across the segments. Let's focus for a second on the corporate segment. The corporate segment grew quite dynamically, almost 5% on a year-over-year comparison and more than 2% compared to the second quarter. Especially the small businesses where, beside others, we were the champions on distributing the state guaranteed, partly state guaranteed loans to companies defined by the program by the Ministry of Finance. Here we have gained a lot of positioning, a lot of, I would say, market share, if you wish, in that particular product. Speaking about the activity of retail clients, in Czech Republic there is a huge boom, accordingly to what is happening in Europe probably, of people investing into real estate, partly because of securing their housing, but also partly for, let's say, saving money or investing money in the safe, let's say, solutions. Next page is showing the deposits. Deposits were growing by more than 8% compared to third quarter of 2019. When you look at the dynamism of that growth, it's mainly based on, that's our understanding of the situation, creation of the cash reserves and cash cushions for potential future less favorable times. This is why the current accounts are growing by more than 23%. Obviously, it goes again across the segments: retail, SMEs, mid caps, large corporations. 3.6% higher than in second quarter. When we focus on non-banking assets under management, here I might say the dynamism is lower. We are still finding ourselves in single digit. Nonetheless, looking at the KB pension schemes as the fastest growing one, one could say that traditional Czech household is also putting aside money also on for the longer term usage in the future. This is from my side for the beginning, everything on the business performance, and I am handing over to Jiří Šperl, the CFO, for guiding you through the financial performance of KB.
Thank you, Jan. Good afternoon once again, ladies and gentlemen. So how these good business results transpose into the P&L, into financials? So for first 9 months, the bank on a recurring basis reported net profit after tax almost 6.2 billion Czech crowns, which is, however, due to mainly COVID impacts, minus 44% compared to last year 9 months. On the waterfall chart, you can see the main contributing factors to this result. So basically there are three. First one, of course, NII, down by roughly 1.5 billion Czech crowns. And here it is very much influenced by the environment, and what I mean is market interest rates, a significant drop. This is first contributor. Second one is about net fees and commissions. I'm going to talk about that a bit more, but basically there are two main reasons: regulatory SEPA change, and the second one is missing transactions during the COVID time. And third one, and the biggest one, is related to cost of risk, where we are missing compared to previous year 3.7 billion, maybe two figures to that. It is roughly 3.4 billion this year creation, and during the 9 months of last year there was still a release, roughly 300 million Czech crowns. All in all, this transposes also into profitability indicators, which still are relatively sound. So ROE is still 7.5. Return on average Tier 1 capital is close to 10%. So still sound financial performance. If I move to the balance sheet, it's growing dynamically. So the total assets at the end of September is at the level of 1.3 billion Czech crowns, which is probably the historical record. On liability side, influenced and driven by deposits, Jan was already commenting, growing roughly by 7.4%. And these extra new resources have been placed mainly to the loans. So loans growing by 5.7%. And the rest into our investment portfolio. And the same like last quarter, you could see on the left-hand side a kind of switch between placements to repo loans with CNB, declining year-over-year by almost minus 9%. And at the same time, relatively huge increase of our investments into securities. If I'm saying securities, I mean government bonds. Liquidity stays extremely high, so loan-to-deposit ratio is fluctuating still around 7.75%, and LCR, on top of my head, it's around 230–240%. So that's about the balance sheet. So I was mentioning that the liquidity is strong. It is still the case for the capital. So at the end of September, our capital adequacy is at the level of 21.6%. Just to remind, the minimum requirement is 16.2. So still there is a let's say surplus, capital surplus around 540 basis points. The left-hand chart is showing the main contributing factors. It is year-to-date, so you see two main ones. First one is consumption of the equity through growth of risk-weighted assets. So here we are talking roughly about 60 basis points. So that's the left-hand side of the waterfall chart. And it is more than offset by retained 2019 dividend. Probably all of you know that we didn't pay anything due to regulatory ban. Focusing on quarterly evolution of capital adequacy, we went very slightly down. On top of my head, it is roughly 30 basis points, and this is fully allocated to organic growth. Focusing now on accounting equity, so that's right-hand side chart. So there is increase by roughly 6.5 billion Czech crowns, and it is fully allocated and dedicated to year-to-date profit. Now let me focus briefly on key GOI categories. So let's start with net interest margin. So it's down year-over-year minus 9%. Now referring to the bottom chart, and you can see here that still both main categories are declining. So deposits are down minus 12%, loans minus 4%. A bit more positive and optimistic view you can see on quarterly basis, quarter over quarter, which is right upper chart, where you see that NII increased compared to Q2 by 5.1%. And again, it is driven and influenced by both categories, I mean loans and deposits. It was not a surprise for us. Even we indicated during the last earnings call that during Q2 it was kind of bottoming up in terms of net interest income. Basically, three main reasons. First one, the drop of the market interest rates in Q2 and at the end of Q1 was too significant and too fast. This is one thing. Second thing for quarter-over-quarter evolution is related to the fact that we let's say, created kind of a NPV adjustment related to the moratorium loans. At that time, it was around 150 million Czech crowns. In Q3, only 20 or 30. Yes. And also, what helped in third quarter was a very clear recovery in the margins, I mean front book of our loans. So maybe there will be some questions related to that, so I will wait for these questions. In terms of net interest margin, it went still slightly down, so quarter over quarter minus 4 basis points. But again, from my perspective, more relevant is comparison year over year. So here we could see roughly 25 basis points decline, and that's basically our guidance by the end of the year as well. So that's a net interest margin. If I focus on net fees and commissions, if net interest margin surprised us a bit in positive terms, here it surprised us partially negatively, not significantly. Our expectation was rather at the level of 10-11% year over year, so it is 13%. And if you have a look on the bottom part of this slide, you see that except one category, which is fees from cross-selling, which is growing relatively significantly, all others are declining significantly as well. It is very much both in relative and absolute terms case of transactions fees, and here it is related to SEPA regulation, so that's roughly 5-6% of the decline. And second one is related to missing transactions during the COVID times. From quarter-over-quarter perspective, there is still a very slight decline. It is minus 3%. But from my perspective, it is more related to kind of seasonality because Q3 is historically rather lower compared to Q2. And what you can see behind is, let's say, summer months, July, August, where transactions size or volumes is decreasing. This brings me to net income from the financial operations. And here, after extraordinary and successful Q2, where we generated more than 900 million Czech crowns, we are getting back in Q3 to the kind of normal. Usually we are indicating that our run rate is whatever between 700 and 750, which is exactly the case during the Q3, so exactly 711 million Czech crowns. What is positive here to see is increase of volumes of the transactions like clean payments and stuff like that, which delivered some positive net gains on FX from payments, at least from quarter-over-quarter perspective. From perspective year-over-year, it is still down. If I have a look on net profit from financial operations, year-over-year, it is still growing roughly by 2 percentage points. And now, last slide at this part of the presentation is related to Opex. So Opex is flattening further. Probably some of you remember that during the Q2 we were reporting year-over-year increase of Opex by roughly 3%. So now we are at roughly 1.9% on a reported basis. And if you have a look on a recurring basis, so that's on the left-hand side of the bottom chart, it is only 1%. If we go a bit deeper into the structure, you see that personnel costs are completely flattish, minus 0.1%. We are reporting a relatively significant drop in administrative costs in GAE, which is related mainly to marketing costs, cut of travel costs, events, and so on. And just two categories that are drivers of this growth of the costs are resolution fund charge, but this was already the case during the Q1, and also depreciation reflecting, let's say, increased investments for our transformation. Last 2 points at this slide. First one is related to average number of employees, so that's top left side. So you see during the third quarter visible decline by minus 2.1%, or in absolute terms it is roughly 130, 140 employees, which is first part of the output of the measures, I mean acceleration of our transformation measures delivered during Q2 and Q3. And last point is related to cost-income ratio. So on a year-to-date basis, we are at the level of 51% and targeting at the end of this year the level around 50%. So that's for GOI, and now it's my pleasure to pass floor to Didier. Didier, please, floor is yours.
Thank you, Hergé. Good afternoon, ladies and gentlemen. So now turning to the section dedicated to asset quality and cost of risk. And in fact, as we announced at our last quarterly result presentation, KB asset quality at the end of the third quarter started to show the first impact from the ongoing COVID downturn. But these impacts being somewhat contained by the government support programs and also mitigated by the resilience of our loan book. The predominant impact came from the intensive reviews of our non-defaulted loan portfolios, reviews which we initiated back in the spring and intensified since then. And as a result of these, as you can see, the stage 2 classified exposure increased from its historical and stable level of 5% to 7%, essentially pushed by two factors. The first one is the in-depth assessment of our loan portfolio, moratorium loan portfolios, which triggered roughly the transfer of 8 billion Czech crown of retail and SME exposures from S1 to S2. Development, which I will further detail in a minute. And the second driver is the line-by-line review of our large corporate loan portfolio, review which confirmed the stress resistance of this portfolio, the transfer into higher risk classes being limited to 3% of this segment, or slightly above 3 billion Czech crown of reclassification from S1 to S2. Not shown on this slide, but worth mentioning is the provisioning coverage ratio of this stage 2 loan exposure, which doubled from 3%, which was its pre-COVID level, to a level close to 6%. And this reflecting the higher default rate outlook linked to the IFRS 9 forward-looking factor, as well as some reprovisioning of selected part of our COVID-sensitive portfolios, including the moratorium portfolio. A quick word on stage 3 or NPL exposures. As you can see, it increased only moderately, with still a low level of migration intensity into this NPL category, reflecting first the transfer of default of a very limited number of SME clients, and second, some higher level of NPLs recorded with our leasing activities. But these ones specifically concentrated on the transport sectors. Regarding our expectation in terms of this NPL ratio, we forecast today that it could reach around 3% at year end, and peak slightly below next year under the, of course, assumptions of our central macroeconomic scenarios. And this forecast also being very much dependent on investors' appetite for NPLs going forward. One last point on the NPL provision coverage ratio, which stabilized at 53%. In fact, here it's always the same story. The lower provisioning rate at the time of entry into default has been, or started to be, somewhat a bit compensated by a few reprovisioning done in the third quarter on some earlier 2020 defaults. Our expectation, in fact, in the coming quarters is that this ratio will fluctuate in the range of 50%. In part reflecting, in fact, the clean pre-COVID defaulted portfolio situation with a limited amount of legacy NPL exposures, as I probably mentioned in our previous quarter's presentation. Now, turning to probably the most important topics when it comes to asset quality. You have in front of you the key information regarding this review we performed of our loan portfolio, moratorium loan portfolio, which in fact gave us the opportunity to have a high level of interaction with our clients, and which was something very valuable to do. Before I go into a bit more details, just to refresh our memories, this is a 60 billion Czech crown portfolio as of the end of September. And it's 8.5 or 8.4% of our loan book. This level is slightly below the 12% level recorded at the level of the entire banking sector. And in terms of our market share, it's estimated in the range of 15%, which is again lower than our overall credit market share of around 18%. Two components for this portfolio. The first one is our mortgage loan exposure at 45%, and the second one is SME at near 30%. The rest being distributed between large corporate, small business, and consumer finance exposure. Now, what is important to mention is that this portfolio reached a peak of 75 billion Czech crown in mid-2020. And this before entering the phase, or the second phase in the summer, when roughly 1/3 of this exposure reached the end of the first moratorium period, either related to clients who had opted for our private moratorium offer back in March, or for short-term period under the public moratorium law. This review gives us three very valuable results. The first one is that it demonstrated our capacity to provide adequate support to our clients in crisis time, with more than 9 billion Czech crown in public moratoriums prolongations granted in the summer months. All this strictly in compliance with the EBA guidelines on loan moratorium programs and legislation. The second valuable result is, in fact, a first good test on the resilience of our credit risk profile. And this is illustrated by the so far low level of payment incident rate recorded on what we call the summer exit exposure, concretely the 15 billion Czech crown I just mentioned. Here, it's worth mentioning that it's not a default rate, it's a payment incident rate. And the second point is the level that we see on the corporate segment, corporate client segment being a little bit higher, is explained by what I said earlier regarding our leasing business line and its higher exposure with the transport sector. The third benefit, in fact, from these portfolio reviews is that it gave us the opportunity to further adapt and really strengthen our credit risk setup in the field of loan monitoring, in the field of retail loan soft collection, and in the field of retail loan restructuring activities. Now, quickly on the cost of risk, where you have both a quarter-to-date and a year-to-date recap. On a quarter-to-date basis, we reached 1.7 billion, and this is made of three main blocks. First, almost 1 billion, 0.9 billion Czech crown, which is the result of these reviews I just mentioned of our moratorium loan portfolio. And the SME and the small business client segment representing roughly 75% of this amount, the remaining 25% being booked on our private individuals retail exposures. Then second element was 300 million Czech crown generated by the line-by-line review of our non-defaulted large corporate exposures. And third element is roughly 400 million Czech crown generated by the reprovisioning of one large corporate client situation, as well as a couple of new SME defaulted client situation and the default migration in our leasing portfolio, which I just mentioned earlier. If we then go to the year-to-date picture, we reached, as of the end of September, 68 basis point, and the structure is as follows. The 26 basis point, which was booked on behalf of the update of our IFRS 9 macroeconomic scenarios, the so-called forward-looking factor. Then the transfer of a few corporate clients into default since the beginning of the year generated 19 basis points or 0.9 billion Czech crown. And then the two other items which I just mentioned coming from the moratorium portfolio review or the line-by-line review of our non-defaulted large corporate exposures. All in all, this, at the end of the third quarter, means that KB Group is in a strong position, having done three things. First, performing and initiating line-by-line reviews of a large part of our non-retail exposures. Second, having developed a better default detection and treatment capacity of our retail portfolios. And third, having booked, as of the end of the third quarter, a prudent level of reserves for all our COVID-sensitive loan exposures. Now going and finishing with the cost of risk guidance. There are three important considerations to be made on this. The first one is the quarterly statutory update, which we have to do or perform on our IFRS 9 macroeconomic scenario, which is the forward-looking factor. On this first one, our opinion today is that what was booked on the second quarter is prudent enough, and this should not be too much of a driver going forward, and especially vis-à-vis the year-end guidance. This opinion is based on external benchmark as well as a regular run we perform based on macroeconomic scenarios issued by regulators. The second driver could come from any material gap that could emerge between the default rate assumptions which we embedded into our portfolio reviews and the actual level of default rates which will be recorded in the coming months. And last potential driver is coming from the large corporate loan book, where here, in fact, we have to be quite humble due to the much lower granularity of this portfolio and therefore the lower credit loss prediction capacity we have. Taking into account these two or three risk drivers in the context of this second lockdown and also based on the so far good level of resilience of our portfolio, we've decided to moderately increase our year-end guidance from 70 to 80 bips, with a clear expectation, in fact, to stay below this 80 bips level, which is really a cap. As to 2021, here again under our central macroeconomic scenario, given all the factors that I briefly touched, our guidance is for a cost of risk in 2021 in the range between 50 and 60 basis points. And this now opens the way to the next section with Jiří on the outlook. Thank you for your attention.
Thank you, Didier. Outlook for 2020. So Jan already mentioned some macroeconomic assumptions, so let me skip them. Didier covered estimate for cost of risk, so that's a slight increase from 70 to 80. And otherwise, I can say that basically we are confirming what we were guiding during Q2 earnings call. So only briefly, we are expecting that the banking market in terms of loans is going to grow in full year 2020 mid-single digits, underpinned by mortgages and COVID programs. Maybe to add that we are also confirming that we would like to gain, and it is already the case in first 9 months, part of the market share. In terms of deposits, it's expected them to grow high single digit, and basically KB is going to follow this speed of the market. And in terms of financial outlook, again, we are confirming that revenues goes down by in high single digit, which is influenced mainly by interest income and fees and commissions, while financial operations are slightly growing. Maybe if I should mention a slight variation compared to our 3 months guidance is that at that time we are expecting a bit lower net interest income, but at the same time a bit higher fees and commissions. But these effects offset each other. Opex, again, we are confirming, let's say, discipline, cost discipline. So at the end of this year, you should expect, let's say, flattish Opex. And that's basically it. Potential risks to the outlook probably not necessary to mention. It's clearly worsening of the pandemic situation, both locally and globally. So that's on my side. That's on for Q3 results. And now I'm passing floor to Jakub. Thank you.
Thank you, gentlemen. So this has concluded the review of the results of Komerční banka for the 9 months. But please stay with us because management is now going to share with you a bit more details about the strategy for next 5 years, 4-5 years. So please stay with us. Jan, please, the floor is yours about the strategy.
Thank you very much, Jakub. And please let me invite you now to the journey of KB between 2020 and 2025. Obviously, the current situation driven by the sanitary and hygienic crisis in the country has made us extremely busy with daily operations, daily details, daily routines. And again, I'm super proud of our teams to cope with these issues in a very efficient way. I need to say that we haven't, let's say, we haven't given up on our high quality service during this period of time. Also, and it's our obligation as top management, we took certain step back and already since fourth quarter of 2019, starting to draft a new paper, knowing that the first part of our strategic plan was framed by the time period between 2018 and 2020, and we are going slightly but steadily to the end of this period. Let me have a look on where we are finding ourselves after this almost 3 years of implementing of the strategic plan KB Change 2020. We were very ambitious in introducing the agile at scale implementation in Komerční. It was very, I would say, a strategic move of our organization, which is helping us collectively at the end of the day to move and to, let's say, modernize the overall corporate culture of our bank. This part of our strategic plan was delivered by 100%, maybe more than 100%. We expected 40% to be affected here at the headquarters. Currently, we are counting for 44% of the headquarters staff working in agile methods in tribes and squads when inventing and delivering modernized products and services to our clients. The other aspect which flew in our KPIs at that time was the client satisfaction. The Net Promoter Score were far behind our expectations, and here we have been systematically working on what the clients exactly need, how can we help them with their life situations, and trying to elevate this feedback through the Net Promoter Score. And I need to say that in corporate, in mid-caps, and to a large extent also for retail banking, we have achieved the targeted numbers. The other part of the key stakeholders are our employees. KB is a very reliable employer and is recognized as one of the strongest companies in the country. Hence, we need to take care on daily basis of the satisfaction of our employees. Here, we have elevated the index upon which we are measuring the satisfaction of our employees from 72 to 78 points. Speaking about about the third important group of stakeholders, which are shareholders, investors, and new analysts. We have put in front of us measurable key results on which we wanted to benchmark our financial performance. As you may noticed, until the pandemic, we were at the levels which were very satisfactory to you, and which were also, let's say, comparable with our targets set back in the beginning of 2018. COVID-19 brought us a lot of mess, right? But also brought us accelerations of existing or new operations and new initiatives. The existing one, I like to use this example of discussions about home offices. Yes, no, to which extent, how do we manage people, how do we control people, etc. The COVID-19 situation turned the key, and we had to put majority of our employees into their homes and secure their connection with the bank and let them work, let them deliver, manage them, motivate them, make them happy, having communication with them, etc. I need to praise our IT guys who are able to connect at the peak more than 5,000 of our employees through direct connection on very secured base with the bank, and the bank being able to continue working in favor of our clients and in favor of the country. What we have done also is a quite bold decision about further acceleration of our plan to decrease the number of branches. We were supposed to be closing, step after step, year after year. We decided back in March to implement one-shot decrease to the existing 242 branches, which is 100 less than we were operating back in 2019. We have also decreased the cash services in our branch network, replacing the cashiers by intelligent ATM machines, which are able to deposit the client's cash. Risk strategy implementation, we have stepped into end-to-end digitization of the journey of risk management from end to end, and we have more plans to do in that area, as I will show you also in next period of time. Smart offices, I have already mentioned, by 35% decreased the square meters here at the headquarters. People using both working from home and working from the office as a permanent solution, as a permanent decision. Here we are retraining not only the staff but also the managers. How do we manage our teams? How do we keep them motivated? How do we keep them engaged? Because we don't want to give up on our high ambitions also in the field of employees' satisfaction. Last but not least, there were accelerated adjustments of our operating setup, mainly in the new service model on the side of Change the Bank, headquarters staff reduction during this period of time, middle office and back office capacity and processes adjustments, reinforced advisory and online capacity of our front offices. We have had a sharp look on our building policy, where we are shrinking the number of buildings in Prague at the headquarters, trying to move everyone under one roof. And last but not least, the partnerships with fintechs, which I have already mentioned in the previous part of the presentation. In between, or in parallel with that, with all these changes, with facing the COVID situation, we are very confident on our ability, not only confident, but we are showing the capacity of Komerční banka to create new capital. We are currently having in our balance sheet 21.6% capital, out of which 20.9% is the of tier 1 quality. The liquidity coverage ratio being at a level of 230%. Loan to deposits are still in very comfortable situation or very comfortable levels of 73.2%. The financial performance were represented by the revenues of 22.3 billion, Opex 11.4 billion, net profit 6.1, and cost to income at the level of 51.2%, ROE at 7.5, ROA and at 0.7. Here we can see already the deterioration caused by the existing situation, and I'm sure we will come back to that point during the Q&A part of our session. Market share across the segments is growing. Our gross lending by almost 6%, totaling close to 700 billion Czech crowns. Market share on loans to business 16.7%. Housing loans 21.2%. Here we are, let's say, beating in certain weeks. We are beating the entire competition. Also thanks to the cooperation between Komerční banka and Modrá pyramida, building saving company. And as a trustful and reliable partner, we are attracting a lot of new deposits in the pace of 8.2% on year-over-year basis, and totaling to 931 billion Czech koruna. The market share in deposits is at a level of 17.3. This is the base. Those are the foundations. We are also taking into account when thinking and drafting we drafted already, but when thinking about the strategic move, about the environment in which we are delivering our results. The traditional high level of industrialization of Czech Republic is turning into huge advantage and huge, let's say, cushion and of resilience of Czech economy in front of the running crisis. We do believe that looking to the horizon of 2025, there will be sharp recovery in 2021, not as sharp as we expected sort of 6 months ago, but let's say still in the very, I would say, comfortable more than 3% rebound. Somehow, let's say, following the logic of expected growth of German economy. And we believe that the Czech economy would have the capacity to go back to low single-digit growth increases of GDP, let's say, in the future, i.e. normalized years. The short-term interest rates will very probably remain anchored close to zero until 2021. Nonetheless, we do create the hypothesis that they will start growing from 2022. Obviously, the rich 2.25% of the repo rate, which we have experienced until the February 2020, are over and potentially will never come back in that level before 2025. We do expect that the long-term rates should begin the gradual normalization a bit earlier and surpass the 3% mark on also around 2025. The loan market growth is expected decelerating in 2021 as a result of as a consequence of the existing situation. Again, the rebound expected in the context of the GDP growth, as mentioned a few seconds ago. The Czech banking market remains super strong and super healthy. We have already commented our capital position. Nonetheless, being part of Europe, being part of continental Europe, we somehow believe that there will be opportunities for consolidation also on Czech market in accordance with the logic so loudly discussed currently in other European countries. Let me say that the Czech sovereign rating was recently confirmed on AA- level, and despite the growth of the public debt, the overall public finance conditions remain very strong, and Czech Republic will continue belonging to the lowest indebted countries in Europe. Let me move to the next one. We think, and we, let's say, are building our future views on various assumptions. The first one is that customer needs will be further moving to the digital space. We want to keep all the strengths which are representing today Komerční banka obviously in place, which is the reliability, which is the long-term partnership, which is the bank at hand of our clients in, let's say, the situation where they need to solve their life situations, life of the human or life of a company. We see clients in Czech Republic ready to pay if value is being delivered. Nonetheless, people want to have, and companies want to have, simple and fast and reliable solutions. They want to be treated individually, so the certain level of personalization is very much needed. They want to be in contact with their bank anytime, from any place, from any devices they will choose, and they prefer to go digital first, especially in the field of the basic needs in their financials. Competitive landscape. Obviously, Komerční banka is very well positioned as bank number 3 from balance sheet point of view, number of clients point of view, number of employees point of view, and others. We want to be number 1 in profitability. We want to be number 1 in efficiency. And we see that the competition in Czech Republic is super strong on the side of the banking sector. Nonetheless, we are far from believing that only banks are our competitors. The competitors are being defined beyond the traditional business of banks, and we see various technology companies bringing solutions in front of our clients and trying to grab part of our flow of our businesses in their favor. This is why we are not closing our eyes in front of cooperation with fintechs, neobanks, in front of, let's say, searching for the best available technologies which we want to bring to our way of solving issues because we want to be faster and we want to be more efficient. Also in cooperation with other companies, as I declared a few minutes ago. Komerční banka will become much more green. This is not a political declaration here. This is a very, I would say, a pragmatic declaration when looking at what is happening in energy sector, where anything between 14 to 16 trillion USD, as it is expected, will be needed to turn the global energy from fossil to non-fossil form. Why I'm saying that KB is traditionally strong in serving the corporate segment in Czech Republic, and we are making already the decisions between coal, yes, no, financing, yes, no, and we see and are building our position in financing the energy transition period, helping our clients to go out with environmentally friendly solutions and to follow them with our highly professional, highly innovative and responsible financial solutions. Let me remind Société Générale being number 1 bank globally in financing the renewables. Here we have a very good example in our parent. Speaking about technology, and Margus will come to much deeper detail, we see technology as the main enabler of our transformation path, and we want to be to make our data, on which we are literally sitting, to be part of our value creation chain and to build around data the appropriate, personalized, fast, user-friendly solutions for our clients. Regulation, we are sticking to the strictest standard of regulatory measures coming either from local or from international regulatory bodies. Let me move to next one. What are the main building blocks of our strategic plan? The first one, let me just repeat the purpose why we are here. We are building together with our clients a better and sustainable future through responsible and innovative financial solutions. The vision is we want to be the leader in new era of banking for 2 million active clients. Here we need to move the needle, and we will come back to it in deeper detail how to gain such a number of clients. Our clients are telling us that they highly appreciate 3 main pillars of our being. It's helpfulness, it's a growth, and it's the responsibility. The company objectives, which are derived from the first 3 lines and which will be addressed by my colleagues in a few minutes, is digital bank for people with aspiration, is fully digital sales and services, operational efficiency with the target to be the best in class based on various indicators, corporate and social responsibility slash environmental friendly slash ESG oriented company to attract also talents and to attract new talents and new clients. We want to remain and to build on our strong goodwill which we have created around agile way of working, which implementation took place back in 2018. We are actively searching for new revenue sources, either on our own or in cooperation with third parties. Didier has already mentioned, and he will come back to it, is creating, let's say, a massively digitized experience in risk management based on data analysis, based on, let's say, the logic of how we can make the people's life and the client's life easier and being still able to make our critical view on the creditworthiness of these clients. Data-driven company, data as a source of revenues and source of value. My colleagues will comment. In corporate banking, we want to remain number 1 in the country. We don't have any reason why to target lower, because KB was also built since the first days of its existence around the corporate banking services. Last but not least, coming, and you can see that as from efficiency point of view, cost saving point of view, value creation, synergies creation, we are putting in place one mortgage factory, which is nothing else than the factory of housing loans being unified for both Komerční banka and Modrá pyramida building saving company. Let me stop myself here. I will hand over to Miroslav Hirschl, who will lead you through the next pages. Thank you.